Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Wednesday, the 27th of October, 2021, and we're at 6:30 p.m. Central Time. Now, important announcement. I'm leaving on vacation for, I've got it open-ended, a week to 10 days, whatever I decide when I get there. But I have no intent of leaving you in a lurch. Now, tomorrow you are in a lurch. I'm on an airplane doing what I'm doing, leaving America, and by the time I get to where I'm going, get myself situated, the last thing I want to do is rush, look at the market, spend 3 hours, and not go out to a dinner and enjoy myself. You're not getting these free updates tomorrow. My paid subscribers in the morning updates, they will be out. Doing it well before I leave, get my Uber, away I go. Now, while I'm gone, I will do my very best without me in these videos to put them out onto the YouTube for you. That's not that hard if I have Wi-Fi where I'm going, and that's a big if. So we will see once I get into the place that I'm going. I love to go a little bit remote, tropical, I can promise you that. It's going to be fun. Okay, so as we take a look at the markets, you're fighting amongst the Democrats, just keeps getting worse and worse. They can't get the president any form of a bill in his hand as he goes to the COPEX 26, G20 meetings, and everything else he's got to go to. He's going empty-handed. They can toss around all the tax bills they want. All that they try to do, I'm talking the Democrats, is find a way to punish the rich. What should be done, and I want you to listen to this carefully because I love to speak my mind here, it's my forum, is fix the tax loopholes if that's what they want to do. Don't go after the people, go after yourself. You know why they don't? Campaign contributions. Who's going to keep them in power? Well, that gives me the other part. So when they try to do this, it's the wrong way to go about it. The right way, close the loopholes, make the game fair for everybody, not the super rich as they call them, and that's it. Trying to go on after 700 billionaires, these guys will gang up and have you in court so long before that's done, you won't know what's going on. Why? Because they're billionaires. They can afford to do it, okay? What they can't do is if you change the law, the tax laws, get that done. You dare not do that. You know why? Where will your campaign contribution come from? So at the end of the day, I want to tell you what I think of politicians. Let's move on. All right. As we look at how this is all going right now, the stock market, we saw today the earnings, and there was a common theme. We don't have the product. We don't have the supplies to finish the products we need to make. That is the theme. It resonates, be it Amazon, they're worried about losing advertisers. How can you advertise for a product you don't have? To the auto manufacturers, why would you run ads on TV to buy this car that you can't buy? There's a lot of problems with all this. It's also bullish as can be down the road. Why? It's all pent-up demand. Let's take a simple thing, a refrigerator. You got to go get one. You can't get the one you want. Yours is broken. You're going to buy something else. You'll probably hate it, and you'll have to get the one you want down the road, right? If you can't get it, or if the one you have will hold on, you're waiting and waiting. That's the most likely scenario. If yours is still working, it may not work as good as it should, you're going to order one that could take 3, 4, 5 months for you to get in that durable goods order. That's what's happening. You don't have to agree with me. I know it because I'm experiencing it firsthand with just a door on my house. But I experienced it firsthand on stones I need. I can go on and on. During the markets, I know you don't believe this, I'm older, but I'm handy. I do a lot of projects around the house. I love to do it because it gets my brain away from the market. And I do it in a way where for this hour and a half, 2 hours, I'm not looking at the market. My phone's in my pocket. If the people need me, they can get me, and then I'm back. It clears my brain. You've got to learn to do things like that when you trade as well. You can't stare at the screen all day. You're going to go crazy. When you look at the metal markets, It's a minor break. I don't think the inflation scenario is anywhere near over. I know that people are saying it's still transitory, but every time that supply chain's not filled, it's not transitory. It means there's demand for those products they don't have, and you just keep pushing it back. I don't know how far back is, but eventually the Fed may be right. You fill the chains up, you get things back to normal, and we don't get all that price pressure. But you're not there. You're at the other side of what the Fed realizes. The supply chain is a real issue. Don't get away from that. On the energies, do you honestly think you're going to go into a COP26 meeting with $90 Brent oil and crude at the WTI at 86 to 90 itself? Come on. This comes down in front of that. As they meet and get over, the market goes back to its normal thing. You don't have to agree with me, but I've only done this 50 years and I've learned the hard way. The obvious often is the most logical path because you don't need the world leaders getting together and go, what the heck's going on there? Should we all at one time turn our attention on this pricing? Let's instead deal with the climate. Listen, learn. As for currencies, just back and forth, copper just hanging on, and let's go to the markets. So we got a little bit of a correction today in the stock market. In fact, this past 2 days. Okay, you're still up, though, for the week, 0.33, and you're still at an all-time high. Doesn't mean you'll finish there come Friday. You can see the correction that's starting to set in. I call the 2 days as I'm talking to you, and today, be it Wednesday, day before you were still up, but you gave up most of the gain. Have we changed anything on the chart? Well, we still have a pattern of higher lows, higher highs. It's still bullish. The market, I told you I thought it would pull back into this 439.50, the old high, and try to fight in that zone. Does it look like I'm off base? I don't think so. When we take a look at Bollinger Bands, they were hit earlier. They're not in play right now. You'd have to start this new move over this high to put them back into play. So what's in play is how deep can this break be, and is momentum being lost? So far, it's not. It's sunk back a little from the 91, 92 level, but it's still fully embedded. I think you're still attracting the buying until the red line closes under 79. In the NASDAQ, until it closes under 79, the reading, which is 90.31, I still think these pullbacks are being bought by the pros looking for new highs in the market. In the Dow, same thing, lose the reading under 79, and I'm wrong. It's that simple. But until then, you have the higher lows, higher highs. 1 or 2 day pullback proves nothing. You didn't break the trend. But the market that I said to you, and I've said it all the way through now, it's Wednesday. I started saying it to you Monday. In fact, I started saying it last week. It's the last one to the party. It's not the strength. And it's already pulled back to the 18-day average. And in the process, now it's got to rebuild everything it's done. It never did embed. It just got overbought. Very big difference. VIX cash, I have been warning that I think the pros first sold the puts right here. And then you started an uptrend. And if you lose the embedded reading, which you did, you're probably headed into this 1785 level, which will satisfy these guys that wrote the put and finish off a contra trend. Why is this contra trend to the upside? Whenever you get an uptrend on the swing line and you're under the 18-day average, it's a contra trend move. When you lose the embedded reading, it calls for a move to the closest moving average. That's what I think is going to happen. Doesn't mean I'm right, but that's what I think. In the T-bond market, you're already overbought. You're in big-time resistance. So what we really did is we got ourselves down here, and I was with you saying, I think the pros cover the first time you hit a lower Bollinger Band, or if you hit an upper one. I think that's where you see the smart money take money off the table. If it continues going, the next resistance, the upper Bollinger Band, voila, and that's where the stall should be. Are we trending? Absolutely not. You got a lower low, higher high. What went on today was the curve yield. The 2-year went crazy. It's the one that took off for the first time in a while. Why? Tapering. Why? Probably going to affect near-term money, not the 30-year, and that's what the market's decided. The big money's moving in now for next week's FOMC meeting. If you don't believe me, that's fine, but that's what's going on. Higher high, lower low, and you'll say, how do I know? Because I've done this a long time. They don't wait for the day before. They'll make their moves to get themselves set. They're moving big amounts of money. So the 2-year became more attractive to them, and it jumped a couple of basis points. It's not like it's dramatic. It's over, what is it, 0.5 and a fraction? It's not like it's dramatic. Lower low, higher high, battleground here. 18-day average. Been doing that. Been telling you that's the number. Is there anything to do? I don't see a darn thing. But. A close over 94.01 and a half could give you higher lows, higher highs over the 18-day average, pinpointing back up there. If you break from here, there's no downtrend that makes any sense to kick in. Excuse me. In the eurocurrency, you had an uptrend that peaked out against the upper Bollinger Band, lost itself, got overbought, and it's just sort of hanging. These currencies have gotten fairly neutral. Is this bullish or bearish? Well, so far it's unable to close under the 18-day average. If it does, then you have the trend down, the bias down, and momentum down. Then you're in the bear camp. British pound, market looking like it wants to roll back to the 18-day average, but it's not a downtrend. While the swing line is down, again, the bias, you're over the 18-day average. You lost an embedded reading. That often calls for a move to the 18-day average. That seems to be what the market is doing. Then we get to the Bitcoin, and I was looking for this to happen once you lost the embedded reading. I've showed this to you a couple of times. This day, last Friday, when you lost that reading was the day this market, to me, and this is what I teach in my enhanced Bollinger Band course, how to pinpoint it, how to play it, looking for the 18-day average. Market comes up, makes me look foolish for 24 hours because I was saying I think it's going down there, and God darn it, if it were a carnival, I'd get the teddy bear and be able to give it to my wife. In the Brent and WTI crude, market down, getting a bounce here. Maybe it got too cheap at the 180 level. But on the energies, I'm going to repeat what I said. You don't send all the heads of state of all these governments to a COPEX 26 with energy prices soaring right in front of them. I'm sure that there's a theory that says I'm wrong, but right now, everything here on these charts says I'm right. Nat gas back up. Why? Cold weather moving back in. That's a little different game. All right? Different, but it's, again, up at the upper Bollinger Band. I don't think it has big legs. So as I said, I'm going to be gone for a while now. You're not going to get my beautiful face here, but my subscribers to my futures and my ETFs, they're going to see what I do in the morning. Unless I can't find a place with the internet, they're going to get their updates. They'll be on time. Away they go for them. So what do I do that for? Remember, the futures market is what many ETFs are based on. You do know that. If you're trading right now, BTIO, the Bitcoin? Come on. It's based on the futures contract, all right? Now they're putting in a highly leveraged Bitcoin. All it is more leverage, but as I understand it, the SEC says it has to be based on the futures contract. It's going to be the same thing. So you start off with the futures in the morning with the combo, and then you move to the spiders. I record the futures about 5:40 in the morning, and I typically do the 9 o'clock, I start recording the ETFs, the rationale in terms of it. I want to get by 9 o'clock all the government reports out. They come out from the private agencies and the government typically over 9. Some of them go to 9:30 or 10, like the EIA reports we get on Wednesday for the petrol and so on. But most of them are in that time frame. So I put it together. You get the game plan, and away you go. And I'm very aggressive in these. I mean, if you're looking for somebody that's saying, buy here, sell there, here's your stop, one trade after the other, I am the guy doing that. Doesn't mean I'm right, but I am the guy doing that. How do you get this? It's simple. Go to our website. Under the word research, everything you need is there. You get 48 videos a month, typically, with this. I say typically. If I take off a day, you don't get it for that day. But I'm telling you, it's pretty typical that that's what you get. And I burn out. That's why I go on these vacations. Who wouldn't burn out? I work, as I said, these 12, 14-hour days. They will wear you out over the end of a day. All right, with that, I'm Ira Epstein. You'll see me when I get back. somewhere between a week, 10 days. You take care.